Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at record high gold prices and where the ASX-listed gold stocks have run too far. The price of gold continues to test fresh records, rising above $3,900 an ounce for the first time. Gold has surged 49% this year, building on a 27% gain in 2024, driven by strong central bank purchases, renewed inflows into gold-backed ETFs, a softer US dollar, and heightened retail demand as investors seek protection amid escalating trade and geopolitical tensions. The US government shutdown adding to gold's bullish momentum, with the metal set to top $4,000 an ounce, doubling its value in less than 2 years.
I don't believe that the gold bull market has ended because of the way the central banks are being forced to cut rates amidst pressure from increasingly populist governments. We've just seen Japan replace its prime minister, and Prime Minister Takaichi appears to be quite will probably do a similar type of policy as her mentor Shinzo Abe and also the US President Donald Trump. So I expect that pushes further pressure for gold to continue to rise in the medium term. But in the short term, I am definitely looking for a pullback being a rational pathway. If it goes up any higher, it rings alarm bells for me.
Well, Bank of America is sounding caution on gold's run, saying the precious metal itself has achieved much of its upside potential and now appears slightly overbought. So could gold stocks be set to lose some of their shine? The Australian gold sub-index is up close to 100% over the past 12 months and hit a record earlier this week. That's compared to a gain of around 10% on the broader S&P ASX 200 index. Now, while Morningstar analysts have raised their near-term gold price assumptions, they note that ASX-listed gold miners are, quote, materially overvalued. Analysts expecting gold to return to long-term fundamentals despite the bullish short-term outlook.
Most of our gold miners look overvalued. Newmont a while ago looked attractive to sort of lag the rest of the space, but that's more than caught up now. We have a long-term gold price about $2,000 an ounce. So against today's price, it's very hard to say that any of the gold miners look cheap. I mean, where we are now in the cycle, where who knows in the short term where it's going to go. I mean, I don't think anyone can pick it, but we're long-term investors and we don't think gold at this level is sustainable.
Well, shares in Evolution Mining have soared close to 150% over the past 12 months. Morningstar analysts have raised their fair value estimate on the stock by 5% to $4, despite saying in August shares were too expensive at $3.80 due to elevated gold prices. On the whole, analysts appear to think its stellar run could be coming to an end. Morgan Stanley underweight the stock with a $5.60 price target, suggesting it could drop 50% from here. Yet ASX TradeWatch data shows there could be further upside, with multiple indicators that shares are in a bullish upward trend, both on short-term and longer-term horizons, the 200-day moving average in particular trending.
But at the end of the day, Morningstar has a unique, I guess, way of valuing things to some extent. That they put a valuation on the company, and then they will determine where the current price sits, and they will have a big range, and it will be unders or overs depending on that big range they have. So not taking a lot of heed from Morningstar, but clearly, the market's run pretty hard in the gold sector, to say the least, and it's probably due for some consolidation.
Meanwhile, Ben Richards from Seneca Financial is looking at some other producers who could benefit if the gold price flattens out.
The reality is, if we have higher for longer gold prices, it's going to be the established producers, low-cost producers like Ramelius, like Volt, VAU is another one. Both of them have kind of re-rated 50 to 70% in the last few months. And yeah, they will be more insulated if the gold price does flatten out here and still generate really healthy cash flow.
And that is your IG Macro Intelligence for this week. We'll see you next week.